This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and I'm going to do a stock market update as of Thursday's close for Friday morning. So let's go ahead and get into the market conditions. I want to take a hard look right away. We've got sentiment, overbought, oversold oscillator, the volatility. We've got momentum on the monthly, weekly, and daily chart, and then the trend on the monthly, weekly, and daily. So for anyone new to this show, I've got trend and momentum I will cover in a minute. I'm going to start out, I work from the bottom and up and work my way up. So for sentiment, there was barely a change this week. We're sitting at 18% more bulls than bears, 44% bulls. We never reached a signal where market made a move to the upside and we got too many bulls while we were overbought. Now, the overbought oversold oscillator, and what I use is this a weekly RSI 5, and it was overbought for about 2 to 3 weeks, and now it's worked its way back down to neutral to the 50 mark. So not oversold, not overbought. We're coming into some moving average support that'll be important, and I'll talk about in a minute. You can see that we've definitely worked off the short-term overbought condition that we had in place when you look at the daily chart. All right, so from a volatility standpoint, I think this is pretty important because we're getting this decline. We have this little ABC decline here on the daily chart, but we're not getting any real change in the volatility. It's not causing this to pop. The size of these bars should be growing in size, and that would increase the volatility. And when that happens, that's when we get a little bit more worried. So we don't have that in either of these time frames. The average true range, the size of these bars going back 20 bars, and then using an 18 MA overlaid in both time frames, both on the weekly chart and the daily chart, they're just not showing an increase in volatility. And so it doesn't mean we can't really go down from here. I'm just saying it's usually rare. Most of the time we'll see an uptick in volatility, especially on the daily chart, before we see a big decline in the market. So we want to keep that in mind. Let's go ahead and get into the trends, though, because we're coming into this such a crucial point. We have 2 moving averages. I'm going to get rid of everything but the price chart. We're going to zoom in on this monthly, weekly. All right. We've got an 18-month that's rolled over and an 18-week that's turned up. Now, I have overlaid the trend line, and anyone who's seen my Stock Talk show would have seen that when you draw a trend line and it overlays on the weekly chart exactly, same slope and same price, we know it's an important and good trend line. This is a really good tool when you're using trend lines. Keep an eye on this. And if you draw in a trend line and let's say the 18 is like this direction and you're putting in a trend line like this, probably something not quite right. So what I like to do is when I see that, I know this is a kind of key level. Now, it becomes even more important when we look at the momentum conditions of these 2 time frames. So let's go ahead and pop that up. Let's go ahead and pop these back up. So we had a move to the downside and then a rally. Now, I actually think the MACD was a lot more negative up here when we were overbought and we were working down before we had an opportunity to work down towards the 0 line. But we did not reach the 0 line, and we've had a rally up to the 18-month, and this line hasn't turned up yet. So we don't have any kind of reversal in MACD yet, and we're still below the signal line. So we haven't really improved the momentum. We've worked off the overbought. You see what I mean? Now, the good news is during this decline, red, while it climbed above green, did not get above 25. So there's not a signal that shows a significant amount of strength. But when I see a test and failure of the 18-month line, it's always going to raise a red flag for me. These are the danger zones in the market. This is when it gets dangerous. If we come down from here, it's really ugly if it turns into something. If the momentum starts to significantly increase based on the sellers, then I think we have to get worried. Now, what I've been saying, especially to my subscribers, I'm not really expecting that. I think there's too much improvement in the underlying universe to expect a massive drop. But that doesn't mean we can't come down and test these lows down in here. Now, the signal that we're watching for is a break of the 18 and the 40 week, which also coincides with this trend line. And why is that the case? Because we've rallied to a declining 18-month. We've rallied up for about 3 or 4 months. You can see it in the form of an ABC rally on the weekly chart. We broke the downtrend line, so we got people bullish, but we didn't get them very bullish because the MACD has only made it back to the 0 line, and we couldn't get green DI to cross above 25. Now, it's hard to get the monthly lines to do something, but if you've got pretty good strength on a weekly chart from the low, we should be able to see the green DI get going, and it just hasn't happened. It's also reflected in the fact that we had a pretty sizable move off of 3,800 from here up, and we couldn't really get the ADX above 25. I mean, it went up for about, 2, 3, 4 days maybe, and now we're all the way back down to 18 on this. So, and red is back above the green. So we don't have there's no convincing evidence on either the buyers or the sellers to tell me that the momentum is strong in either direction. So I have that at neutral. I have this at neutral because we're moving up. You can't really call it, I guess you could call it negative, but I would consider it more neutral when we're straddling the 0 line with MACD. And then this has worked off the overbought condition. So I can't really call this negative, especially because red DI has stayed below 25. So I've got all three of the momentum signs neutral. The problem we have is a price pattern where we broke and then rallied back to the 18-month, and we have an ABC rally with no momentum here really to speak of. If we break this line, we should definitely be looking for a test of a better test of support. Now, what did take place this past week was the trend line break, what we've been talking about. And now the question is, does this rally up and make a lower high and form a 1, 2, 3 and break the trend line in the process? If we break the 18 and the 40 and we break the trend line and we get a 1, 2, 3, you have to prepare for some form of a decline. I could be totally wrong in what I'm seeing, and this could turn into something ugly, but you have to be prepared for that. Now, the other thing I'll tell you, because of the volatility, don't be surprised if we get a good rally off of this zone. I mean, we've come down to a pretty key level. We've got the 18 and the 40 run underneath. We've got the trend line in place. We do have the potential for a pinch play. Okay? I mean, we've pulled back. We got lower high, lower high, lower high. And we're getting into a key zone at 4,000. And we've got the MACD above the 0 line. It's basically straddling, but you could consider that kind of a little mini pinch forming. Now, if it's going to form that way, I personally think we're going to rally up and come back down. I think these are going to come together a little bit more, and I think we're going to get a 0 line reversal. So that's how I feel about this right now. Now, even if we look at the hourly chart, we've had this strong move to the downside, and you can see that based on the ADX. But look at what happened. MACD just has a little divergence here. So again, yes, this is strong, but we could get a rally, and that sort of supports the idea that we're going to go test 4,100 up around the 18-day. How it reacts there will tell us a lot. This is the type of stuff you got to be on the lookout for. Look, you don't have to be a type of guy that makes a big market call. You can go down to these smaller time frames and use them to your advantage, and they will help you determine whether to get long or short here. Right now, and for the last 2 to 3 weeks, I've really been trying to keep people from making a big market call because we're caught between these two lines and they're converging. They're getting closer and closer together. At some point, we're going to make a move, a substantial move in one of these directions, and that's what you want to be ready for, and that's really where you're going to make the next meaningful amount of money. Right now, we're just got little trading moves taking place. All right, that's the update for the week. Go ahead and post any questions or comments. Thanks.